The biggest rise since 2008 continues to dominate Chinese markets. The indices are posting some of the biggest daily gains in history. The situation is even more remarkable on the individual stock titles. Let's take a look at the top 5 companies that are currently growing strongly. Hey investors, this is Chris from the 𝗕𝗂𝗶𝚀 team. No information in this video is an investment recommendation. Always do your own analysis. We can't start with any company other than the largest one operating in China. Tencent, which focuses mainly on operating digital platforms, has already improved by 22% since last Monday, taking it to its highest level since mid-2021. This significant growth, which is supported by government incentives for both the housing market and the stock, is driving the price of this giant ever higher. The company's market capitalization is already $478 billion. Profitability was 18.92% last year. The company thus earned over $16 billion. Even after the decline in the use of its services after 2021, its business is still expected to only flourish in the years to come. The company has WeChat and QQ apps in its portfolio that enable communication, content sharing, and mobile payments. WeChat, with over 1 billion active users, plays a key role in China's internet ecosystem and is used not only for communication, but also for payments, ordering services, and many other activities. Alibaba is a very popular stock among investors, not only on 𝗕𝗂𝗶𝗀, but unfortunately, it hasn't done so well in recent years. Many investors started buying the stock at high prices with the vision of steady growth. The company has delivered, but the geopolitical situation in China has led it into a skirmish with the leadership there. The company was severely curtailed and fined, but now it is back in the limelight. Thanks to the strong growth of the last few weeks, the price per share has gone below the long-standing $100 mark. Last year's profitability, which was 8.47%, led the company to earnings ahead of $11 billion. Current projections suggest that revenues could rise by $46 billion and earnings per share by 3 years over the next 3 years, an increase of 37%. The $271 billion capitalized company now pays a dividend that is close to 1%. If you want to know fair prices and have unbeatable news, not only on companies from this video, join the 𝗕𝗂𝗶𝗀𝗃 community, where you will also get detailed analysis of attractive stocks, portfolio tracker, fair prices, and much more. Join 𝗕𝗂𝗶𝗃𝗃 now. Jingdong, which trades under the ticker symbol JD, is another very well-known Chinese company that is in the e-commerce business, similar to Alibaba. JD.com differentiates itself from its competitors by its approach to logistics and services. The company has invested heavily in building its own comprehensive logistics network that includes warehouses and delivery centers across China. This enables JD to provide fast and reliable delivery, with some orders being delivered the same day. Its shares have already jumped 77% since the announcement of the stimulus package, with today's gain being over 9%. That puts the price per share above $47 for the first time since 2022. JD pays a dividend of 1.85% once a year. It can easily handle its current debt of $11.86 billion if needed, as it has cash in excess of $28 billion. That's almost half of the $60 billion market cap. For the next few years, the company needs to work on its profitability, which has been hovering around 2% in recent years. Another company that has been pretty much overlooked in recent months, despite the hype in previous years, is often referred to as the Chinese Google. Baidu dominates China's search market and has become one of the biggest players in artificial intelligence, AI, and internet technology in the country. Baidu's main product is its search engine, which has more than 70% of the Chinese search engine market share, making it the unrivaled leader in this field. The company's shares are already up 35% since last Monday, with today's gain of just under 6%. One share can now be bought on the exchange for $116, making you pay the highest price since January 11th this year. With what the company's growth prospects are in the coming years, investors are now not missing out. Indeed, it's not just FOMO at this company that is forcing investors to buy. Last year, the company made $2.77 billion, the most since 2020, when technology was a major driver of the world. A slightly different trend on the chart, which is caused by previous price fluctuations, can be observed for Pinduoduo. While the company's shares have also appreciated significantly in recent days, like other Chinese titles, the share price is still not at its highest levels in years or months. Thanks to a deep plunge after recent earnings, which sent the share price down 36%, the price per share is recovering thanks to the current incentives. $150 is the price investors last paid in mid-August. Pinduoduo is clearly one of the colossuses. The $187 billion capitalization, along with cash of over $47 billion, playfully covers the debt, which is only $1.34 billion. The company also focuses on running e-commerce services, but its competitive advantage is specific. The company promotes what is known as collaborative shopping, where users can team up with family or friends to make purchases at a better price. Of course, these 5 Chinese companies are complemented by many others that have also been gaining significant strength in recent days. Coming on Friday, you can look forward to a separate video about NIO and its position in the automotive market. So keep subscribing so you don't miss any more interesting videos. Good luck with your investments.